From DailyForex, this is Chris taking a look at the dollar against the Canadian dollar. The US dollar has rallied early against its northern neighbor, but there is still a significant amount of resistance at the 1.34 level in the Canadian dollar. At this point, if we can break above there on a daily close, then I anticipate that the dollar will probably go looking toward the 1.35 level above, which is an area where we have the 50-day EMA and the 200-day EMA converging. That obviously causes a lot of technical noise and therefore a lot of potential resistance. It's also a large round number, which of course the market tends to like as well. We have bounced rather significantly in from a rather important low. So it'll be interesting to see how this plays out. It's probably going to be tied to the crude oil market and the fact that although the Federal Reserve is likely to cut rates, signaling that perhaps they're worried about the economy, the reality is that the Canadian economy is essentially parasitic to the U.S. economy, meaning that the Canadian economy is highly levered to what's going on in its southern neighbor. The trade between the two countries is pretty extreme. Anybody who's been to the Ambassador Bridge or especially the Peace Bridge in Buffalo can tell you just how many semi-trucks there are. So if the United States has economic trouble, the Canadian economy does, and therefore traders tend to punish the Canadian dollar due to the inability to export. We'll have to see how this plays out, but in the short term, I'll be looking at the 1.34 level and seeing whether or not we can break out to offer another 100 pips to the upside.